Hello, welcome to Top Trading Edge Academy, guys. Today 16th October, Sunday, and let's take a look at the market condition before market opens up. What the market look like? So market update. As we can see, S&P 500 right here chart. So what happened here? As you can see, on a Thursday, we market ran off on a CPI print. We had the bearish news, and the bad news become the good news, and that's what happened. And we got the rejection, all the seller lined up on the top, right, as you can see that, and we end up around 357. Same time last time also, when we got exhausted, we found the support 357, market took off, went back down, went lower low, and market took off again, and then we got again rejection and sitting at the same spot at 357. So what does the market look like, Josh? Okay, well, where we sitting right here at the support area, but looks like we're getting lower low. So the sellers are in control. As you can see, all the MACD is sitting on the bottom, RSI pointing south. Only bad part is the MACD and the signal line both are hugging and kissing. So that means Monday's fresh day starts, and see what it brings. But the sellers are in control the way it look like. So you can see right here, tops are falling, trying to rise the bottom, tops falling, rise the bottom, tops falling. So again, same thing looks to me here. We did not even try the resistance, which I was expecting market should have tried, but not all the way up there. There is a gap up there to be filled, but that didn't work. So right here you can see tops are falling. So let's take a look at 30-minute chart so we can get the better idea. So what exactly market is doing. So right here, market gap down in a pre-market and gap up on Thursday, and Friday sell off right there, and we ended in the same spot right here, found the support at 357. So the MACD looking bearish. We are in the middle of the bear cycle. Still the pressure is down, sellers are in control. That's what it look like. All right, so I think the pressure is downward as far as I see, but Monday is a fresh week start. So let's see market maker agenda, see which direction they want to go. The pressure is down. If they want to create any more demand to go up, depends on their agenda. But at this point, the supply, there is no supply, and that's what we got sell off, and sellers are in control. All right, I noticed a couple of things, guys. Okay, that's what I need to talk about it more, if time permits. Look at that dollar. Let's take a look at the dollar. What exactly happening on the dollar is flying high. And I also wanted to tell you, JPY, USD, Japan bond is falling like crazy. USD, JPY, look at that flying high, guys. The Japan bond is almost 45% up in 1.5 years. Look at that. So Japan bond market is in a big trouble. I made a video a little bit, and I told you guys there's 45% 1.5 year. This is the developed country. If their currency goes banana like this, and basically the country comes out and buys their own bond, if their own central bank prints the money and buys the bond, that's not good. That's why they own 67% of their own bond, and that's why the currency is going downhill. This is not a good, guys. Okay, Japan is a developed country. Then also I noticed, okay, keep it in mind, guys, this is the UK, about the UK, right? Remember the UK said we're gonna print unlimited money and try to help the pension fund until 3 days. So now those 3 days are over, so we need to take a look at what's gonna happen. Great Britain pound, right here. So that now if they're not gonna print it, probably they're not gonna help. That means something going to collapse. If the yield rises, remember, every time when the bond market goes banana, means vulnerable, and the yield goes higher, because if the government cannot pull the printer, then the yield goes higher. Yield sits on a front seat is not good for the currency, for the economy, right? That's what I mean. You need the GDP along with it to go with it. That's why right now the problem in the Great Britain pound is gonna have a hard time to climb against the US dollar. Now, second thing is, I also noted the Swiss bank. Remember the Swiss National Bank? They came out and they went to the back door and said, hey, 9 million, total 6 billion. They got it from the US Treasury, from the Fed, basically, right? 6 billion. Total $9 billion they got it for emergency temporary fund. Some reason they needed that. Now they got to pay back. There is something is cooking out there too. So we got to keep this thing in mind. Also in China, guys, China, the world biggest market real estate, they are in a big verge of collapse. All the banks are in a, over there, the banks who lend the money to the citizens, now they won't be able to pay their mortgages and all. So I think that's the big market out there, and they are on the verge of collapse over there. So that is another side of how things are going on. So the what I notice here is, these are not a good sign, and that's the reason. If I'll show you something about here, the two, everything is about now. All the 2 year yield, it has gone 4.53 through the roof. You see that through the roof right here. So two, that is inverted. Now this is 5 year yield is inverted right here, which is 4.23. This is 10 years also 408, that is inverted. This is 20-year yield also 433 is inverted, and look at the 30 is also. So everything pretty much now crossing to the 4% and above. So 30, 20, 10, 5 and 2 year, all yields are now crossing 4%. So it's top in the roof right now. So what does it mean? The yields are sitting on a driver's seat, bond market sitting in the bond market, and the stock market is a very teeny weeny market compared to the bond market. So they are sitting in the back seat, and yield is driving this world market, guys. That is not good, right? That means the recession is imminent, and nobody can save that. As far as I see right now, man, we are definitely having the recession, but that will take time. It doesn't happen overnight, guys. That does not happen overnight. It takes about 24 to 40 more 12 months to 14 months, though JP Diamond came out and say about 6 to 9 months. But yeah, it could be any time frame, could be anything, but it's normally happening, is going to happen. So be careful, guys. And that you might see in a real estate, because mortgage market right now, mortgage rates are way high, 7.5, 7.6, 7.8. That is outrageous. So people won't be able to. So credit market will be the get impacted first, and then slowly you will see in the news coming out. So we got to give a few maybe earnings. We need to watch earnings now. The earning coming out, right? That's what market is waiting for, the earnings. So once the earning comes out, we get the better idea what market is going to go. But I think market is waiting for the earnings, and we all know that earning would not be good, and forecast will not be good, right? So then we could go right here. Target is 338. All right, so guys, just to give you one update, please join Top Trading Edge Academy. I'm always live Monday to Friday. I just wanted to give you one news, guys. I feel like my runny nose and the runny eyes. So let's see how do I feel in the morning. If I don't feel good tomorrow, I don't want to be sneezing on live. And also, please pardon me if I could not make it tomorrow. Yeah, but I will keep you posted all these video every night. I'll keep you posted about the video, and you'll let you know. All right, so maybe see you on Tuesday if I cannot make it on Monday. All right, I'll update on the video. Thank you for being here, and see you. All right, thanks. Good luck to you guys. Thanks. Bye.